From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 22nd, 2015. In just a moment, we're going to be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's analysis. But first I want to recap a couple of the trade suggestions made over the past couple of days, starting here on the USDCAD, the US dollar versus the Canadian dollar. Yesterday, we were looking for a breakout of our congestion zone, the green shaded area at the very top of the chart. And as you can see, the market just still sitting inside the congestion zone. The pattern of the trend has been this. Down at the bottom left-hand side of the chart, we saw congestion, resistance, breakout. Went up to the yellow zone, congestion, resistance, breakout. Pink zone, congestion, resistance, breakout. Continuing all the way up to the green shaded area now, we're in our congestion area. The next thing, of course, we're looking for is eventually a breakout and a continuation to the next resistance zone, which is the blue shaded area, all the way at the very top of the chart into the upper 1.4 thousandths. Now, there's no, of course, guarantee that that's going to happen, but that's the expectation in the direction of the trend and in the direction of the pattern the market has been working within. We zoom in a little bit more here on the daily time frame. We can see today coming down towards the bottom of our congestion zone. Well, the expectation would be, as it has been for the past couple of days, that close here, 1.3918, 3920, we're now looking for support for the currency pair. So again, yesterday we talked about putting a pending buy order down at the very bottom of the green shaded area, the congestion zone, right around 3920, 25, bottom of the green zone. If you're in there, then you're looking for a buy to be triggered at any moment. We can see there is a buy limit sitting here at 39.20. Hasn't been taken in yet, but I wouldn't expect that to be too much longer if it takes any dip back down towards the 39.18 and the bottom of our range. Of course, the risk is pretty well known. The risk is that it breaks underneath here and continues to go back down towards the orange shaded area. So you know the risk. You know the potential reward. We're going back to 39.75, but beyond that, the potential reward is all the way back into the upper 1.4 thousandths at the very top of the chart. So definitely watching still for the breakout of this green shaded area. Break below it, likely continuing down to the orange zone. Removing the trade, if it doesn't do what we expect to do, will be a way to save some capital on the trade. Moving on over to the GBPUSD, Great British Pound versus the US dollar. Yesterday taking into a sell into the orange shaded area. Took a sell into the orange shaded area. You can see it's finally pushing underneath the 48.90 level. Over the past several hours, we pushed under 48.90, the 4900 level, and now you can see it continuing to pressure lower. Current trade from 49.20, which is all the way again up there at the orange shaded area, sitting about 50 pips of profit on that trade. Also, during yesterday's trade room, we were looking at a sell opportunity into resistance here for the euro dollar. We could see left-hand side resistance, resistance in the top, looking at right-hand side resistance in between 1.0920 and 0.940, the orange shaded area that we see here on the chart. That's the area that we're looking to go short here. We do have a trade, 0.925. I went ahead and put the trade on. Currently seeing a little bit negative, about 18 pips negative. We just need the bears to start causing this bearish reversal once again for the euro dollar. We do have some U.S. news coming up here at 8:30 a.m., so you definitely want to watch that if you're trading any U.S. pair. Down to the 4-hour time frame, you can see, let me zoom out one time. Take a look back here in the left-hand side. You see the 3 blue circles, resistance, support, congestion. So we know the orange shaded area is a highly important trading decision zone for the euro dollar. Zoom it back in, you can see the market coming into that same decision zone. So for the day today, within or below the orange zone, we look for, of course, the turn back down towards the yellow zone or maybe even the green shaded area and the reversal of the trend. Anything open and closing above the orange shaded area, I think that'll be the key point. Open and close above 109.40 will be the key point. If it gets above there, we look for it to continue to pressure back up again for the euro dollar. And over the past few days, just the opposite of that, we've been holding a buy scenario from the green zone on the US franc. At this point, we're just looking for the market to stay above the blue shaded area and the 9900 level and start to work its way back up towards parity, the 1.0 level for the US franc. Okay, now moving on over to the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. Here on the New Zealand dollar, we're on the weekly time frame first. We can see the long-term downtrend. Let me take the trade window off for a little bit here. We see the long-term downtrend. That's the red trend line that we've been in. What's most important about that is where the current market is in comparison to where that long-term trend is. Take it on down here to the daily time frame and take a look. Today we are challenging and touching right into that long-term trend line. So that's important to note, because as long as it stays within or under that blue shaded area and that red trend line, I think we're looking at potential resistance and reversal for this currency pair. We see the last time we were here into this price level, we can see the blue shaded area, we can see the black box over here. It challenged it, couldn't break above it inside the red circle, and eventually reversed and went back down. So this is a very similar scenario that we're looking for here into the current market, especially now that we're touching into that long-term red trend line. Let's zoom it in here on the daily time frame. I've taken Fibonacci high where the red circle is down to the low. That put the 786 right at 67.96. We're a little bit above that right now, but the 886 sits at 68.40, which is just a hair above the current high for the day today, 68.40. So what I'm looking for today is resistance into the blue zone and resistance into the long-term trend line, the weekly trend line that we're looking at, in agreement with what happened the last time and the Fibonacci levels that we're seeing there. Fundamentally, it makes the most sense for this to go down. We've seen a cut of interest rates in New Zealand, a raise of interest rates in the U.S. Fundamentally, it makes more sense for this to go down than up. We just need some positive U.S. data for this to turn back down again. We could expect resistance between 67.95, 68.25 today, the blue shaded area underneath the red trend line. A breakout, open and close above here, likely looking at least for a target back up here towards the green zone as our next resistance. Very similar to what you saw back there in the red circle. That would be back up to 68.80, 69.10 or so. Final reversal from here, we take it back to the pink zone, the orange zone, and possibly even a new low to be made for the New Zealand dollar. The bulls still have the current pressure, but looking for the reversal here for this pair. I've already taken into a sell. You can see that down here into the 68.12 level at the very bottom of the chart. You can see that currently sitting right at that price level where you can't get much better than that. So zooming it on down to the 4-hour time frame, again, you can see it just sitting in there. We did attempt over the past several days to sell into the pink shaded area. It just hovered into there for such a long time, showing us resistance and eventually breaking out. We get out of those losing trades when the market doesn't do what we want it to do. We were looking to target back down here to the orange zone. When the market doesn't do what you wanted to do, you get out of it, you look for a new opportunity. That's what trading is all about. So the new opportunity today is selling the blue shaded area. 68.10 to 68.25 is the top of the blue shaded area, so that's where you're looking for those shorting opportunities for the day today. Anything above that and the 68.25 level, open and close above that, we're probably looking for the continuation higher, so get out of it pretty quickly. I'll have about a 45 to 50 pip stop loss on this if we can sustain the hold of the resistance here. We'll look for the continuation lower for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.